Kia ora, I'm Jeremy Couchman, the Senior Economist at Kiwibank, and I'm joined today by Mieneke Perniskie, a trader at Kiwibank's financial markets team. Now, recently the Reserve Bank of New Zealand delivered their fourth consecutive 50 basis point rate hike to take the official cash rate to 3%. And they're certainly not done there. They signalled with their official cash rate track that they intend to lift the cash rate to above 4% over the coming year. Now, at the moment in the New Zealand economy, inflation is just far too hot. We're importing goods and services with prices that are rising because we're still feeling the effects of the impact of the war of Ukraine and also the supply chain disruptions around the world that came out of COVID. So for the Reserve Bank, this high prices we're importing is coming into the pressure cooker, that's the New Zealand economy. We've got businesses that are still struggling to fill positions in their workforce. They're still paying a lot for materials, and this means they're having to raise their prices and also their wages. So that's just adding to potentially a second round of inflation. So the Reserve Bank has to relieve the pressure in this pressure cooker by hiking interest rates, and that's what certainly they've been doing. We now expect the Reserve Bank to actually lift the cash rate by another 50 basis point hikes to 4% by the end of this year. So yeah, they're certainly not done here. Now, Mieneke, since this decision that they've made, what's happened in financial markets?
Yesterday, the financial markets reaction was actually quite muted and wasn't quite what we expected. So we expected that the Kiwi dollar, for example, would probably go back up above 64 cents, given that the rate hikes are still very much hawkish for the plan. But what happened is we saw a high of 63.83 before we unwound all of that and ended up back around 63.50 on the day. And then overnight, some US dollar strength has seen the Kiwi fall further again, and we're sitting around 62.75 today. So it wasn't quite the reaction that we were expecting. And I think that this indicates that going forward we'll be looking more into global markets and what the Federal Reserve has to say and what they do next as well. So this is not a Kiwi-focused problem only, it's a global issue with inflation. It's a global issue looking at the potential recession on the horizon as well. And if that comes to fruition, then we might actually see the Kiwi dollar lower again. But basically it's about global factors. So the actual move was muted on the day.
And in terms of demand here in New Zealand, there are certainly signs to show that demand is cooling already. We've got very low business and consumer confidence at the moment. So this is going to be a tricky balancing act for the Reserve Bank as it looks to tame inflation by raising interest rates, but not cool the economy too fast that would push it in an unwanted recession. So I hope you enjoyed that, and thank you for listening.